Hey Trade Pros, what is up? I hope everyone's having an amazing time and welcome to our YouTube channel. In today's video, what we're going to be talking about is scaling in and out of positions properly. Now, we could do this in different assets, right? We could do this in options, stocks, futures, whatever it is. But the idea is we're going to talk about how I like to scale and how I think that scaling should be done, whether it's into or out of positions. So if you are excited for this video, just please drop a like and hit that subscribe button. Comment down below. Do you guys scale into positions or do you just throw whatever position sizing you have in mind at the first move? So scaling into positions can be used for day traders and swing traders. So let me know, what do you guys do? Now, I also want to say that we do have a free Discord chat available to all where we post daily trade ideas on options and futures, and it's in the link down below. So go ahead and check that out. We'll make sure to see you guys there. And remember, once we hit every milestone in our YouTube channel, for example, 60,000 subscribers, we will be opening up the trading room. So what will we do for 70,000, 80,000, 9,000, and 100? The prizes, quote unquote, get bigger and bigger. So help us reach those numbers and we will help you out by giving you more stuff and more content. So I really hope you guys enjoyed this intro and this video, and let's talk about scaling in and out of positions. So hello, welcome everyone. On the screen here, you can see my face and you can also see the charts that we have up. We're not necessarily going to be talking about the SPY, but we can talk about any position. Now, before we get into this, I just want to talk a little more about scaling and what the opportunity is in scaling. Now, when we scale positions, what we need to know is that we add into a position step by step. So the typical scaling regimen could be maybe thirds, right? Quarters, depending on the expected move. Now, the way I like to scale is look at the potential first move as 50% of my original position, and then look to scale either the second 50%, or we can divide the last 50% into 25% and 25% of the original position. So for example, if I want to take a position that is only $1,000, right, I'd go 500 first and then maybe 250 and 250. Same thing, if I have a $10,000 position, we go 5,000 first and then we go 2,500, 2,500. So typically when we scale into positions, what we are looking for is a continued move, right? Now there are two ways that people generally scale into positions, and that would be on strength or on weakness, right? Averaging in or averaging down, as you might have heard about it. So if you're scaling into strength, you are scaling into a move that has already gone in your way. That means the first portion of the position has already gone green. For example, here on my screen, you guys can see, right? Assuming that we're great traders, right? And we start picking up a piece right here, right? For example, if we start getting long in this area here on the SPY, and then maybe on strength, what we're going to do is add into the next area. Now, if we were scaling on weakness, for example, right, maybe we would start a long position here, right? It goes up and then it might go down, and then we add to that long position if we have conviction. So those are the two main ways that people generally scale into positions. And I'm going to start by saying that scaling into a position on strength is my go-to. I would rather be right at first and scale and add to a winner than add to a loser. Because if we add into a loser, who knows, maybe the position continues to drop and drop and drop, and then we'll see that continued downside and the position turns to crap very fast and you turn a small loss into a bigger loss. So I want to just scale into strength. That's going to be my go-to. I want to make sure that I'm buying into strength or selling into weakness. Now, when it comes to scaling into strength and buying into strength, the idea is when we open our original position, we have to have a thought process behind it, right? Here we have the SPY, for example. We could look at the futures as well. We have to have a thought process behind it, right? It's coming from strategy. So if we think it's going to go up, we don't just add into a position, right? And how are we going to add into the second portion of the position? So typically, the first portion of a position, right, is based on, for example, a break and a retest or a break of a level, right? If we have this level identified here on the SPY, my first add is going to be on the break of this position, whether it's options or futures, even because we have the ES futures or the stock itself. So I'm going to look for the break of the position, and then what I'm going to do is look for either the second break of a key level to add into that strength or the break and retest to add into that strength. So the break and retest of a level is very typical to add into strength as long as it holds, right? So if my original position is down here, let's call it at 451, I'm going to look to add into strength probably on the pullback and the complete control of this, right? That means breaks above the prior red candle, 451, let's say 55. That's going to be my second ad. So we have a higher average position. When we have the higher average position, we are looking to see if we can scale out somewhere even higher. So let's take an example on an individual stock name. I'm going to look for an individual stock name that we may have traded today, and this was a news trade, right? It's going to be PayPal. You guys can see what the daily on PayPal is here. So you're going to see the daily here on PayPal on the right-hand side. And you can see it's a pretty drastic drop, right? A pretty drastic drop on heavy volume. Now, this was a news event. So news comes out, PayPal to acquire Pinterest. So understanding that, right, what you need to know is that when a company acquires another, the company that does the acquiring, right, is the company that takes on more risk, right? So there's more liability on the balance sheet, meaning that there's going to be downward pressure in the stock name. Company that gets acquired, Pinterest, is going to necessarily go up, right? So on our friend here, PayPal, what we want to do is see a clean break of the lows, right? News comes out, clean break happens, meaning that our first addition, right? The first addition of the short, whether it's options or stock itself, is going to be under these lows once we get that candle close, right? So that means our first addition is going to be somewhere at 269, right? We add at 269 and then we get this pullback, right? And then a few rotations. Now we could add into the second rotation into this level, right? Because we get that first push and then the second push into it. We can add into that rotation, or, right, we wait for the break of the new lows to add into that position, right? And then we come down, we push up again, right? And then this is the end of the day. So we should be taking profits on these moves. So when we scale into a position, right, the first position, I usually like to buy on momentum or sell on momentum in this case. So what we're doing is looking for the clean break of a level. Second addition is either the break of a new established low or the pullback into where that impulse started. We could add into here or the break of those lows. That's what we want to do when we're scaling, right? Scaling into a position, we want to sell into weakness or buy into strength. We don't want to do the opposite. Right? If we're selling and the thing keeps going up, there's no need for us to keep selling, right? I don't want to average into positions. I already want to know what's strong and get into that. So the other process, right, comes from scaling out of the position. How do you know when to scale out? When in options, it's a lot easier because in options, we understand very well what the percent gain is of the position. So if the percent gain starts accumulating at 30%, right, and above, then I'm scaling out of the position slowly. So for example, let's say, typically we'll do like 10 contracts, right? 10 contracts or so, depending on the price of the option, right? It's not always going to be 10 contracts. But let's say we add 5 here, and then we add 5 into this area, right? Once these lows break, by the time we get down to here, these options, the first 5 are well above 30%, believe you that. Once we get this break of the low, we start scaling out, right? Maybe 2s at a time. 1, 2, 4, 6, right? And then we're slowly pulling the stop, right? 8 down here maybe, and then when it pulls back, the other 2. So the idea is we're basing our exit and our scaling out on tens of percent. So 30, when it comes to options, I do 30, 40, 50, and so on, right? And then once it gets to 70, potentially, I just look to trail the rest and see how much we can squeeze out of it. When it comes into stocks, individual stock names, you're probably not going to be trading the larger caps, right? The blue chip caps. So, for example, Wish had a nice move today. It's a smaller name, right? And for example, the first edition is going to be on the break of this, right? You get the break, and then the second edition, maybe the break and a retest of this impulse area, right? So you see how well that works. Now the idea is, right, this thing has gone up 11%. The idea is I typically like to scale around like 2%, 3% on the small caps, low floats, 1% even. So that means that if we pop this, right, I'm probably going to be scaling out. Let's say we get the full size, right? The full size and then the average of that move. Let's say we do 554 plus 588 divided by 2, right? That's going to be 571. So from 571 average fill, somewhere here, right? That means that the next move, right, we'd ideally want to scale out at these tops and then see if we can continue by trailing our stop. Now, if we scale into a position originally, right, this is what we didn't cover, we scale into a position originally and then it comes back, right, we have to know where we want to get out, right? It's hard to turn a winner into a loser, especially in this type of strategy, because, right, it hurts psychologically. Not that it's impossible, but it hurts psychologically. So sometimes we honestly might just want to get out of the position, re-add into it, right, without expecting this whole move. I personally like doing stuff like that. So in a commons position, if it's gone like 4 or 5%, I'm probably out of that position without being able to scale the full size. Same thing with options. If I don't get that opportunity and we're up like 50% on the position, I'm not going to start adding necessarily, right? I like to just scale out and see if we can add more size maybe on a next turn. So just keep that in mind when you're looking to scale in and out. In terms of futures, it's very similar as well, right? We want to scale into strength and then sell out when we have that opportunity. But when we scale out is different because you may not get those percent gains in the futures, right? The ES, for example, if we look at it, it's not going to be a percent move if we start scaling in, for example, at these 18s, right? You go from 18 up all the way into 32, it's only 0.3% of a move, right? That's not necessarily 1%, but we go by points, right? We scale out by points. So assuming that we've scaled into a position, right, our full position's in at 18, let's say, I like to go 2 points, 4 points, like 8 points, then see how we can continue, right? I like to usually take out my first around 4 to 5 points, not 2. And then the rest of it, I put at break even +1 and see how we can scale out of that. So it's based on points in futures, based on percent ROI in options, and then percent move in the underlying for stocks. So if you guys enjoyed this scaling video, let me know in the comments down below. Smash that like button for us. Hit that subscribe button for us, especially if you're a new subscriber. If you've seen our videos a lot and you haven't subscribed yet, we drop bombs like these every weekend. And every day we go live in our morning updates. So I hope you guys really enjoyed this video and let us know what you want to see next time around. So we're going through your comments and we're seeing what you guys want to see, and we're going to start making a lot of those videos. We've already started. We're just waiting to release them. Thank you so much, and we'll see you guys next time.